Starting right now.
Bang! I want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. Monday, July the 2nd, 2012, 4 p.m. Eastern. Same bat time, same bat channel. What a day. Look at that hourly chart on the S&P. This was after the U.S. ISM number comes out. The worst number in 19 months, I'm fairly certain. Under 50. Yes, construction spending is up. We're seeing housing numbers certainly continuing to be stronger. But from what levels? I mean, construction spending was up 0.9 versus 0.3. Yippee-ki freaking A. I mean, you want to see an impact on the general GDP of the economy. You want to see construction spending up 4%, 5%, some really robust number. So, yes, while we have seen signs in the U.S. housing market that things are getting a little better, from what levels? From what year-on-year comparisons? We're now into the third year of the freaking disaster, right? So, from what levels? But again, I think there are other numbers that really are scary. And again, this ISM, remember, that's the old NAPOM, National Association of Purchasing Managers Index. And I understand the argument why the market rallied back. I understand it. But it is so stupid. Because while you might think Bernanke, Helicopter Ben coming to the freaking rescue, at some point it's pushing on a string. At some point, the same crap just doesn't work. Is this money flowing into people with mediocre credit? No. Aren't that the people that need to start their small business because they can't find a job? Yes. It's a joke. The money isn't working. It's not getting where the Fed wants it to. That's why it's pushing on a string. Keeping rates low? Okay. But it's all about jobs, and we see that on Friday. But markets can be irrational, as one great writer said, right? Markets can be irrational for far and longer than you and I can stay solvent. So that's why money management is the key. And listen, we take this channel line out, we're going to the next channel line, baby. So it's like 1376. But I'll tell you one of the other numbers that really was disturbing today. Prices paid. Deflation. Let me tell you something. You want to deflate the stock market, you start getting deflationary numbers. It's over. Over. And one of the things I fear again regarding the S&P, it's going to be one of these meltdowns that you got to be there. And then that's it. It's over. You can't really trade from the bear side anymore. You get this 1 month period of like Shangri-La, and then choppy. And then boom, in your face. I'm talking about a bear market. A bear market is something where we go down and down, where you can sell the rallies, where we would have gone down from here, retested 1,000, and we start grinding lower, where you can sell the bounces. But obviously, instead, you buy the pullbacks. The Bernanke rally. This is the moment of truth here. 3 times the charm, 4 times to the moon, or are we going to roll over? I mean, this is it. We are getting to the point where this market could melt up, and then we melt down. Again, it looks like we're going higher. Now, this is a very, in my opinion, bearish. It's a doji. Crucifixion doji. But markets are closed early tomorrow. 1 o'clock, I believe the U.S. markets close. Stocks, S&P 130. Markets are so thin, traders are leaving, they can easily run this market up. Easy to my 76 level. Are we going to get here? Maybe that's on an ECB rate cut. I am eyeing more that China GDP. That's going to be the number that's going to make or break this market. And, sometimes you got to look at the monthly, which we sometimes do. I don't want to do that. Certainly starting off the month, coming up blue. Could we, pop a little more? Absolutely. Are we going to make it through this 1390 level, 1395? I do not think so. I think, again, this is going to be the failure. Failure. If we take it out, listen, you measure the move. We're going to 1500 easy. We're talking about 1550, 1560. If you swing it, you add up what we got here. What was that? 1425. The low was 1265. That's 160 S&P points. Add that. You're talking 1585. Holy crap. That's just on a measuring the move basis. But again, the headwinds to me are insurmountable. I think these, when the sell-off comes, there'll be air. Things will go down in chunks. You won't be able to get out. Flash crash 2.0. And a lot of the moves, listen, these fake out. If sell in May, go away worked, right? Sell in May, go away. May. If you sold at the beginning of May, you did fine. You're still good. And then we rally a little bit, and at the end of July, the heat gets going, stuff starts happening, cracks in the whole plan. Bad news, China GDP under 8%, which would be big. Now listen, was the Japanese Tonkin report much better than expectations? Yes. Was that a sign of life? Sure. But there's only one problem. Fukushima. Better trade relations with Korea. A yen that actually weakened, if you think about it. Right? 3 months. I mean, you had this rally. That's why, again, the Tonkin benefit, the Japanese benefited. That was the reading, in my opinion, from the Tonkin here. Remember, the yen had been very strong. This was a nice rally. And I think that's why the Tonkin was between Fukushima. And also you had, remember, weren't a lot of factories shut down? Wasn't some of the automakers, I forget which one, had no parts, so their sales are exploding year on year. So you would think, again, Tonkin would be affected by that. So I want to see another one, and then I'll be very impressed. Hey, listen, if there's one country that should lead the world out of it, Japan, third largest GDP in the world, they've been in a freaking stagflation. Not really stagflation, actually. Stagnation with deflation. For the last 20 freaking years. Almost. Well, certainly 91. So, to me, the yen, you would think, who knows? We could even see more of a rally in this yen. Imagine if Japan was actually having to raise rates. Now, you would need to see inflation then. It's the only way, if you saw inflation. Do I think that's going to happen? I think at some point when the world economy does turn around, hell yeah. Japan's a sleeping giant economically, you would think. U.S. is in the first inning. Japanese are in the eighth. Right? So again, S&P daily chart. It's a doji. It's a crucifixion doji. I'm still bearish, but nervously bearish. I don't like the comeback today. Thin markets, plunge protection team. But the euro acted terrible. Obviously, we thought the euro was a buy. I still think the euro's a buy. I'm still looking to buy this euro. I'm long some, but I'm still looking. I think we come in, maybe get to 25.20. And I'm telling you, 4th of July, something's going to happen, maybe on the good side, and they could rip this market. I think we sell off tomorrow if we're up. I think they drill them. But I got to tell you, Remember, 4th of July is a U.S. holiday, and I believe Canada, I think. So I expect their markets, and I also expect the Australian RBA to be on hold. Numbers have been pretty decent out of Australia. We got retail sales coming out in 2 days. But this Australian dollar, got to tell you, very strong today. New Zealand dollar, very strong today. Dollar Canada, all commodity currencies were very strong. Come on. Well, let's see. I'll have to overlay it. You only get the 5-minute chart. But dollar Canada, flagging, just like the S&P. And I'll tell you, the RBA, in my opinion, the RBA is going to be more skewed towards saying that things aren't so bad. Yeah, it's frozen. Things aren't so bad, in my opinion. I do not believe the RBA is going to be cutting rates. In New Zealand, not that they're the same, but still you had a New Zealand with a number that was unbelievable. Up 1.1% their GDP last month, remember? So you look at this Aussie, and it's certainly toppy. Here, right? Here, but it's a new closing high. We've broken out of this whole downtrend channel. I think you really got to go to Mr. Fibonacci at this point. And that's 103.75. And you back the truck up, 103.50. Again, if you think the S&P is going up to 1390, then hey, we're going up here. We're going up to 106, 107. Easy. We're going here. Oh, shoot. Again, in my opinion, the Australian dollar is the most correlated to the S&P than any of the pairs. The number one correlation, to my opinion, is the Australian dollar. Look at. So again, if we close above this 104, we're going to 107. I'll get long. Just like if the S&P closes above 1370, close, not well off the highs, then we're probably going to 1390. But I think tonight, if we get up there, because again, I think the bulls certainly have a lot to be bullish about from a market the way it traded standpoint. You ever hear the saying, you can't fight the tape? Well, pretty much today was a day tough to fight the tape. You had the euro sell-off, but that's about it. Cable made new highs. Not by much, but still. Today was all about the euro selling off. Today, and the yen. If you look at this New Zealand dollar, this baby's going to try and break it too. Right there. It's ready to melt up. Certainly 81, fill in the gap. Easy. And again, then at some point, you got to go, once we break that out, got to go to Mr. Fibonacci. It's so frustrating. I've been talking about Church Christ for a year now, saying they're going to benefit dramatically. So we got to get to this 80.76. That'd be very bullish. Remember, that's through the golden retracement. So I think tomorrow's close is going to be very important. I think if we do reverse hard, that Aussie gets up there and we reverse and the stock market reverses. And hey, I think, to be short, and remember, foreign exchange is open, but to be short over the 4th of July certainly isn't the worst thing in the world, as long as you could trade Forex as a hedge, meaning, our market's open 24/7, baby, 24/6. Only closed on Thanksgiving and Christmas, New Year's. But, that way you could do, if the market's exploding, there's good news out. You could go long the euro and be short the S&P. But I think, listen, you talk about terrorist attacks, trying to hijack a plane. That's an old one. Maybe they're doing something else. Remember, I've been, unfortunately, for years, thinking to be short over the weekend because you never know what's going to happen. I've been saying that for years. People share my videos. Come on. None of you are doing it. Couple. Come on. You can share it on YouTube, share it on Twitter, share it on your Facebook. Come on. I need those advertising dollars. Getting killed in the market. This dollar counter doesn't look so great on the downside. But again, under 101.50, toast. Toast. And again, the way they're going out, these futures, fairly strong. And should any piece of good news, listen, the Europeans might come out with something to screw the American traders. I can see that. I still love this dollar Swiss short. They could totally come up with another deal before the ECB on Thursday. Why not? Other numbers we have coming out, really, construction PMI out of London. Sterling certainly acts well. Again, another doji. It was the euro. Euro Canada hit. Look at that move. Everything. Euro Aussie continues lower. Meltdown territory. I mean, this thing is going to go for the freaking lows. Which is why, listen, I'm hoping this euro can rally so we can sell it at 129, 130. And then ride it down to 119. I do think we go back down to the original opening price, 119 of euro dollar. Oh, yeah. Euro Kiwi. It's going for that low. Incredible. And I'll tell you what, we go down to that. Who knows where this sucker could go? I mean, we could be, we're talking, this is a 10-year chart. Gold really not doing much today, down a little bit. Or maybe it rallied. I thought it was down most of the day. Comes back a little bit again. If they're going to be printing more money, which is what they're going to need to, you would think gold is really should be a buy. And with that move we had on Friday, and with the non-farm payroll coming up, I got to tell you, I'm more biased gold to the upside. I think crude goes lower. I think long gold, short crude. Again, Iran shooting their missiles off, getting their rocks off. You got to be kidding. I mean, seriously, if their missiles are as good as the United States systems, I would be shocked. Iran is still a third world country, and if you think Russia supplies them with state-of-the-art stuff, their best, no way. They give them the junk, the middle-of-the-line stuff. We know about their stuff. So I just find it hard to believe. I just think if there's any war, the U.S. will kick ass and take names. I truly believe that. And that would be a big talk about an empire going down. If there was a skirmish and Iran really won and sunk a couple of U.S. naval vessels, holy crap. Talk about a turning of the empire. Again, I'd still like this dollar Swiss short. I think this was a one-day reprieve, and we get back to business. S&Ps came back. I think we need some sort of good news. I thought the SNB comments were a joke. I mean, they're basically preparing you for capital controls. They're preparing you for more disaster to come in the Eurozone. Why would Jordan be talking like that? I mean, this Euro Swiss, you would think would be up huge on the comments today. But nothing. What does that tell you? If you can't go up on that, it's going down. Even with capital controls. Even with charging to be long it. I mean, paying to deposit money in a bank, that's incredible. But, hey, it doesn't make a difference. Flight to quality, tsunami, they can't do it. And they said only inflation. Well, there's not inflation. There's deflation. So I don't know what the hell they're talking about. And dollar index, last but not least. Oh, wait, dollar Canada. Yeah, I did that one already. Sorry. Dollar index. Again, a reprieve. Little bounce. But again, I think you sell the strength. I think if there is any strength, 82.10-ish. Again, I'm still a buyer. I still think the euro looks good. This is a one-day reprieve. And all the other dollar pairs, at least the ones we focus on, really held up. All right, everyone. Again, email me, info@globalfxllc.com. I'm still dollar bearish. I am not bearish in the S&P. I do think you fade the rally, and it fails tomorrow. Tomorrow's a big day. I mean, if they go nowhere, obviously tomorrow means nothing. If we're just sideways. But I just think we got to break out to some levels. Let's see if the market can hold. And I think, again, this week is a crucial week. I mean, this is the week either the bulls take the reins and the bears get slaughtered, or we have a monster reversal and that sets the tone. So we'll see. Again, follow me on Facebook, Voice of Forex. Follow me on YouTube, Voice of Forex. My fan page. But remember, you can also friend request me at Andrew Spanton, SPANTON. And again, I'm doing year-end deals. The rest 6 months. 6 months for $600. It's a good deal. And my premium people, you guys get even a better deal. I'm rewarding the premium members with a little better discount because I'm desperate for members. All right. Have a good one. Let's see what happens. Again, Australia, I think, will set the tone. It's 12:30 a.m. tonight. And I think we could job back and forth, but I think they're going to be on the more – things aren't bad, so bad. We can hold rates steady for now with no rate cut on the horizon. And I think Australia rallies on that. Andrew Spanta, Global Markets Radio, the only voice you'll ever need, who truly loves to make you money. Have a good night.